Hello guys, it's Chris from the tradingexchange.co.uk, and this is the fourth video in our series of training videos for the Trading Exchange course. It's all really designed to help you become more established as traders, using these technical tools to your advantage to start earning you a bit more money. Okay, before we get started, just the typical trading disclaimer to run through, and that is really in summary to explain that trading financial markets is risky. It involves the risk of losing all of our invested money. Please use any information that you find contained within the videos or the website entirely at your own risk. They're designed for educational purposes only, and they can't be constituted as financial advice. Alright, so today we're going to be taking a look at the Relative Strength Index, okay, otherwise known as the RSI. And it's my personal favourite indicator to use within my trading. I use it all the time. For anybody that's seen the reports that come out on this website or daxtrader.co.uk, which I run, you'll notice that it appears on quite a lot of the charts quite frequently. Alright, so we've got a DAX chart in front of us here, just simply because it's my favourite market, but you can apply the RSI on any market, on any time frame, and it will work on Forex, indices, commodities, shares, any market you really want to trade. Now I'm using FXCM and their market scope charting package, but RSI will appear within any of the charting packages that you might be using. So NinjaTrader, MetaTrader, anything like that. Okay, so I've got a chart for the DAX. Let's just go and load up an indicator for RSI. And for the purpose of the video to begin with, I'm just going to use the default settings, and I'm not going to change any of these details you can see in front of you here. There we go. Let's make that a little bit bigger. And there you have it. So today we're going to do a quick introduction into RSI and look through some of the RSI basics. We'll take a look at an RSI trading strategy, more specifically looking at divergence, which are brilliant signals, and we'll have a look at some sort of more advanced RSI settings as well, and that should give us a much better way of dealing with RSI in our trading. Start getting into some really high probability, high profit trades, which is what we want. Okay then, so we already know the RSI stands for Relative Strength Index. Okay, it's an indicator which falls under the category of oscillators. And it's a really simple indicator to use. In fact, as I've said, it's one of my favourites. Now, the indicator was originally created by Welles Wilder. You can find all of that sort of stuff out on Wikipedia if you're interested. He also created a number of other technical indicators as well, like the ATR, the average true range, and the parabolic SAR. Now, oscillators are used to help determine when a market is overbought or oversold. And when we say overbought or oversold, we mean that the buying pressure or the selling pressure has run out of steam, and it makes the chance of a reversal of price direction much more likely. So for example, if buying pressure is running out of steam, we can expect prices to fall sometime in the near future. And when that situation happens, it helps us time, or better time an entry for selling the market. It works the other way around, of course, as well. So when selling pressure runs out of steam, we can expect prices to rise sometime in the near future. And when that happens, we can time a buying opportunity just that bit better. So RSI is going to help us time our entries and our exits. And we'll look for opportunities where it can do that. Okay, now since our RSI is an oscillator, it's plotted with values that range between 0 and 100. 0 being the absolute minimum. You rarely ever see that, but that suggests that the market is extremely oversold and there's a very high probability that it's going to reverse. And to the upside, that is. And 100 is the opposite. It's the highest value. It's where the market is absolutely overbought and the probability of a reversal to the downside is extremely high. Now, you'll never really see prices reach those areas, but you'll see prices get into a zone, an overbought or an oversold zone. And typically anything that's over 70 is considered overbought. Between 70 and 100, this area here. And below 30 and 0, well, below 30, between 30 and 0, would be considered oversold. So this zone here. So when we're saying overbought or oversold, we mean we're either in the overbought zone or in the oversold zone. Okay? Alright, so that gives you an introduction into RSI. Now, in terms of the basics, the RSI is most popularly used to determine, as we've mentioned, when the market's overbought or oversold. So over 70 or under 30, if you use the default settings, that is. Now, when a market gets oversold, okay, let's try and find an example. There we go. There we go. There's one there. When a market gets oversold, a new trader, someone either new to trading completely or new to this particular indicator, will often think that the market has to immediately get out of that oversold condition and start going towards the top. So they buy the market. Or when the market's overbought, here for example, they'll just immediately sell and think, yep, it's got to turn around now, and they'll get themselves into a position. And sometimes it will work. They'll be fine. They'll be able to make some money and everything will be happy. But it can often get traders into a bit of a difficult situation. Because once price gets into an oversold area or an overbought area, it can often stay there for some time. I mean, like days or even weeks, depending on what time frame you're using. So the problem is that they'll get into that trade, but price will continue to move in that direction. Traders get stuck in a horrible position and either have to cut the loss or get themselves into ridiculous problems and stick with their losers, which is just horrible. So markets are known to stay overbought and oversold for prolonged periods of time, and it gets these traders into dicey trading situations. Now, the logic is correct. It's oversold here, so it probably will return at some point. We just don't know when. And it is overbought here, and it probably will return. We just don't know when. In this particular case, the trader was absolutely spot on. Up it went. In this particular case, it didn't straight away. In fact, there you go. It continued moving up. Went down a little bit here, but continued moving up. So I guess my question is, whilst that is the general premise of how you would trade RSI, you would wait for it to get into overbought, you'd wait for it to get into oversold. How do you use it effectively? And that's where you're going to make money. And the simple answer to that, if you can say there's a simple answer to it, is to use it in connection or in conjunction with other tools as well. Okay? And what I mean by that is you need to understand a support and resistance, which is a slightly more advanced tool. But if you can get a basic understanding of that, then you can really, really use this to your advantage. So me, for example, if I put this on a daily chart, let me just show you a perfect example of resistance. Now, the daily chart on the DAX, going back to 2015, shows us in a pretty bearish trend. Okay, ever since our sort of all-time highs up here, April last year, we've been in a bear market. But we reached a major low a couple of weeks back. In fact, it was last week, maybe even. Last week. And we bounced from there. But we've reached an area of what used to be support, which was this area here, back in September last year, where price bounced from that area, created an area of support. Came back, contested it here, bounced again, broke through it, and now we're testing it from the underside, which is a really common thing that happens in financial markets where previous support becomes resistance. So at the moment, we are currently at resistance. So you could look for selling opportunities because we're in a bearish market and we're looking for selling opportunities. And that is the basics of RSI. You want to understand the market that you're in. Are you in a bearish market? Are you in a bullish market? Or are you ranging in a neutral market? And that's essential to understand which signals you want to take to trade the market with. Okay, I'll repeat that in a moment. So we've decided that we're in a bearish market. We've rallied up to resistance, which is almost perfect for anybody who wants to short the market. That's the ideal trading opportunity because you would just simply go short. You would put your stop loss above the recent high, and you would just ride that, hopefully, for hundreds and hundreds of points. £10 a point, you're making thousands of pounds. It can be that easy. So if we just zoom into a better time frame, let's go back to this 30-minute chart, and we'll use the RSI to pinpoint areas where price is overbought, like here, and then we would sell for those opportunities if we think it's going to go down. And that's kind of the basics. And that leads us nicely onto a simple RSI trading strategy. And this is where I'm going to repeat myself a little bit. Okay, so firstly, to determine what you need to do for your trading strategy, you need to know which direction is the market going. Is it heading up? Well, I mean, on a 30-minute chart, it looks like it is. Yes, it looks like it's heading up. But we've already seen that on the daily chart, it's heading down. So all that's really happening at the moment is that price is rallying towards resistance. And resistance is around about current levels. This is kind of the perfect entry. So we could zoom in even better than that and say, right, I'll go into a 5-minute chart now and let's look for a perfect entry. So we know that the market is trending down. We know where roughly our resistance level is, where we want to start selling, which is about here. Finally, now what we need to do is decide which signals we want to take. Now we're in a bearish market, so I only want to take a selling signal. And the perfect selling signal, unfortunately, has gone because it was there. In fact, there's your candle right there. That's the absolute perfect one to take. But I missed that. I actually didn't get in until here. But, you know, whatever. Life's not perfect. I'm quite happy to keep that trade going. So you would simply put your stop loss up here. And you would continue to trade. So in this particular case, stop loss will go there. How much are you risking? So in my particular case, I'd be risking 123 points. I want 2-to-1 risk reward, so I'm going to double that to make 246 points, which is going to be about there, which is about 91.90. There we go. So our entry was there. Let's just delete this line here. There we go. Our entry was this line. We're risking that much. We want to go for that much. In the grand scheme of things, you could go a heck of a lot more than what I've just gone for. In fact, you could probably aim for this sort of area here, or even continue to head for that area of support down there. And you've got hundreds and hundreds of points that will be coming your way if it goes the right way. So these are the kind of trading setups that I'd personally be looking for. So for a trading strategy, if the market is ranging, okay, so it's not bearish, it's not bullish, it's just simply bouncing between a high and a low, you can use both buy and sell signals. Okay, so you can buy when it's down here, you can sell when it's up there, and you can use both sets of signals. If the market is trending up, then ignore the selling signals. Don't sell at all, just use the buying signals only. And if the market is trending down, like the DAX is, then you only sell. You ignore the buying signals. Okay, it sounds simple, but believe me, a lot of traders will ignore that rule. If you can stick to that, RSI can be your friend. Finally, look for signals. Once you've found a signal and you've checked the rule, then you can use a protective stop loss. Okay, so let's see if we can find a better example here then. I'm going to consult. Let's go with the Euro USD. Why not? All right. So I've got a chart here. It might look a little bit messy. It's a 1-minute chart. It's probably the reason why. Let's go with a 30-minute chart. Let's just tidy it up a little bit. There we go. Okay. So we've got the Euro USD. Now you might have your own opinion on fundamentally what you think this market is doing, but just looking at that chart, it says it's bearish. Okay, so I'm looking to sell that. It's a 30-minute chart. It's quite a lot of data. In fact, it's a good week's worth of data or so there. I'd want to sell. So I want a high probability trade set up to sell. And the rules for that would be as follows. Let's just actually show you what I'm going to be writing in my article for this video. Here we go. That's what you want. High probability trade setups to sell. So you're either in a range bound market or the market is trending down, which it is. Okay. Now you want to be approaching an area of resistance. Okay, and you can probably just research a little bit more about support and resistance, or check out the video for support and resistance, which will be coming up later in this series, to figure out how to do that. But let's just assume that resistance is this line here, or even let's have a look, that line there. So what we're looking for is for price to come and rally up to that line, and if we get that, we want to sell. Now in this particular case, actually I haven't had any selling signals. So what I'm going to do is I'm going to break a rule here and just change my default settings. Okay, what are we going to do? There we go. I've just changed my RSI indicator from 70 and 30 to 60 and 20. And I'll explain a bit more about that in a moment. But just for the sake of this as an example, it's giving us quite a number of sell signals here. Because what we're really looking for is where price doesn't just go across the overbought line and comes into the overbought zone, but the signal actually happens once price comes back through the line after having been in the overbought zone. Okay, so it comes through the overbought line, stays in the overbought zone, comes back through into the normal zone again. That's where you'd get your signal. And there were 4 of them there. You could have sold any one of those if you wanted to. Okay, let's take a look at another market. I'm just going to put that back to neutral. There you go. For the purpose of the video, let's ignore that. Okay, let's have a look at a bullish market. So what's been bullish recently? Do you know what? I've not traded Forex for quite some time. I couldn't tell you. This is a Forex only account. So let's just go back to my normal one. What has been bullish? Gold, probably. Let's just change this to gold. Here we go. I'll come back to that in a moment. Just a quick summary before we continue there. Excuse me. On that selling market, when we were looking at it, the RSI went above into the overbought zone. In this particular case, it was actually 60 and not 70, but the rule would be 70. And as it's about to cross back below 70, you've got yourself a signal. Once the candle closes and RSI is once again back into that neutral area, you go short. You place your protective stop loss above the recent high. So you've got these candles. Let's say you entered there. Stop loss up here. You measure that distance between where you got in and that stop loss. And then you go twice that distance down. Brilliant drawings, I'm sure you'll agree. Okay. Good. Now it works the same way in reverse. So let's just take a look at this. And we've got a gold setup here. So high probability setups to buy. You determine your market first of all, which we have. We've determined that the market is ranging. Sorry, it's not ranging at all. The market is trending up, as you can see in front of you there. This is a 4-hour gold chart. Definitely bullish, right? So let's zoom into a 5-minute chart. We want to look for buying signals. Okay, just to really drive the point home. There was an example right there. You could even continue to buy now if you wanted to, but yeah, it just gives you an idea. Okay, so you had your signal here. You could have gone long there. So you would have simply entered into the trade, wherever that was. Let's say it was there. Place your stop loss quite a few pips below the low. And then you aim for twice that, wherever it is up here. And you can go long. Okay, and that's simply because it fell into the oversold zone. And then cross back out again. Okay, now the key thing really to remember is this point here, which again just needs a little bit more research if you're not familiar with your support. We haven't plotted the areas of support or resistance on these charts because it falls outside of the scope of this video. So we're assuming that we've reached an area of support in this example. RSI crossed below 30. Yes, it did. About to cross back above 30, which it did. Excuse me. The candle closes. RSI is now above 30. You go long. Place your protective stop below the recent low. And then go at least 2 times the money. That's the goal. All right. So we've laboured on that point for quite some time now. Hopefully that's made sense for you. If not, just perhaps go back and look to the video or send us a message. But when you're trading with RSI, the situation you want to look for in the buying opportunity is a pullback down to support when the market is in an uptrend. And another situation you want to look for, especially when you want to sell, is a rally up towards resistance when the market is in a downtrend. Okay. I'll repeat a final point, and that is that markets are known to stay overbought and oversold for a prolonged period of time, especially in strong trending moves. So we don't look for sells in uptrending markets, and we don't look to buy in downtrending markets. All right. Last few examples just to wrap up the video for today then. So RSI Divergence. Now this is a really popular topic for me, and I've got some indicators that help me with this particular signal. Now RSI divergence is very similar to MACD divergence, stochastic divergence, which we've already discussed in previous videos. And so on occasions you're going to get a signal. Okay, let's say you get a signal. In this case it's perfect, in fact. Couldn't have written that. Here's a perfect example of what I'm going to talk about. So you've got yourself a signal to go long in this market. Okay, so you went long, but actually price fell down and created a lower low. May even have stopped you out on this trade if your stop loss was quite tight. So you've made a lower low on price, but the indicator has made a higher low. Okay, so lower low price, higher low, and you have this divergence between the price and the indicator. They're going in different directions. That's an example of positive divergence. If you see positive divergence in a bullish market, you've got a really good signal. And when combined with an area of support, yeah, is pretty much what you want to be looking for. Same thing that we talked about before. The reverse is also true as well. And I'll see if I can find an example of that using my indicator. Let's have a little look here. Let's just make that bigger. Okay, this is a bullish market, as you can see. It's a 30-minute chart. You're looking for buying signals, so there's an example there of bullish divergence. There is only one example of bullish divergence there. You do get examples of bearish or negative divergence here, but we ignore those in bullish markets. Let's have a look for another one. Okay, this looks like almost a ranging market, but no specific examples to use there. Okay, and here's an example of a bearish market. So you would say here, for example, you've got negative divergence. Price makes a higher high. But the indicator has made a lower high. That negative divergence indicates that we can sell. Okay, so look out for those signals, especially when you take a signal to go short on RSI and it stops you out. Check to see if you get divergence, because it's a really good re-entry for a second trade. Okay. Finally then, advanced RSI settings. So RSI is an indicator that you can customize. Okay, it can work on any time frame. And let me just bring up what were we looking at? That didn't work. Let's try that again. We like that. Okay, so this indicator can work on any time frames and work on any market. But as with any other technical indicator, the RSI works better on longer time frames. Now this is a 5-minute chart. Okay, I use the RSI on 5-minute charts, but 30-minute charts probably more commonly. You'll get more accurate signals on the daily chart than you will do on a lower time frame like 5 minutes. But the signals are going to be less frequent. You might only get one in a week, or maybe one in a month. But they can be really strong signals, because you can then drill down into the lower time frames to get more accurate entries. So as a trader, you just need to find a balance between the right number of solid opportunities and the right degree of accuracy of the signal. Okay, so you can choose figures with RSI. You've got the number of periods that you can choose, and you've got the overbought and the oversold levels. Now I'm going to jump into this in a bit of detail very quickly. Now the number of periods, I mean, you can find any article to explain what that is, but it's just going to take in, as part of its calculation, how many candles back is it going to use to calculate the RSI reading. Okay, so 14 means it's going to take 14 candles. That's the standard default. I sometimes use 13. It makes not a huge amount of difference. Or on lower time frames like a 5-minute chart, I might up that to 21 or even 34 periods to smooth out the noise. Okay, you'll get less signals, but they can tend to be a bit more accurate. But in a nutshell, I'll most often just leave it at 14. The things that I do change will be the overbought and the oversold levels. Now, we roughly touched on this earlier when I changed the 70 and the 30 level to 60 and 20. And some might ask why I do that. And the answer is simple. If I'm in a ranging market, if I'm in a market that's not moving one way or the other, I'll use 70 and 30 because I want buy and sell signals, and I'm happy to take either. In a market that's trending up, I only really want to be buying, and I'm happy to buy more often than sell. So I'll move the levels from 70-30 to 80 and 40. So I want buying signals more often. In fact, it's probably better if I actually show you on here. Here's what an 80 and 40 right here on the euro pound. I want buying signals, and some of them work, some of them don't. Such is trading. So 80 and 40 for bullish markets. For bearish markets, I'd use 60 and 20. So I only want to be selling. A couple of good opportunities there. And for regular ranging markets, I'll happily just use 70 and 30. Okay. That's pretty much everything that we've gone through for RSI. So you roughly know how to get it onto your charts now, what it's useful for, and how to make the most of it. The key thing to remember from RSI is that whilst it's a useful indicator to use on its own, it is much better when used in conjunction with support and resistance, or even another indicator if necessary, like a moving average or whatever you want to use. Don't just jump straight into a buy or a sell signal. Use the strategy rules. Sometimes you're going to have to ignore a trade signal if you haven't got the right confirmation. Divergence signals are possibly the stronger of any RSI signals that you'll get, so look out for those and combine it with support and resistance as well. Don't be afraid to change the settings. Have a play around with it to find what works for you. But good luck trading with it, and I hope it's really successful for you. and we'll see you in the next video.